How are you guys? Right, I just want to talk a bit about inflation versus deflation, because it's all over FinTwit and everywhere else at the moment that we're going to get massive inflation and everything's crazy and everything's breaking out. So what I want to actually do is just let's look at the charts and see for ourselves just how inflationary everything's actually looking. So we'll start off SOYB, soybeans. Let's have a look at this. Okay, so this is the weekly chart that we're on, and we can see that from 11th of May-ish, April. So April, May time is when we put in this bottom, we started moving up, and then boom, we've had a strong breakout in soybeans. So I've been taking that on its own. Yeah, okay, they've got this big rally. You know, it's strong. However, we can see that we have had this pattern down. So let's have a look at the long-term picture. Let's see just where things are. Oh, hang on. Yeah, so we can see that back in, when's this? August 2012. It doesn't go up below. This is the first, September 2011. It'll be interesting to see the GFC and see where that works, but there's not a lot in it. So we can see that, yeah, okay, we've had this huge rally, but we've also, like, May 2020 was an all-time low as far as I can see, at least for as long as this chart goes, for soybeans. So it's really not that inflationary in the grand scheme of things. We're coming up to this resistance level here, which was a previous peak from back in 2016. It was a support zone here previously. So it'll be interesting to see what happens. So we're clearly getting a price increase, but then the other thing you need to ask is why. Now, I'm no expert on soybeans, but we could probably reasonably assume that there's a lot going on with COVID-19 causing restrictions on farming and getting things moved and transportation and all these extra costs and everything else. So that's likely to also have an effect on price. So just because we do have this rally as well doesn't necessarily mean it's due to money. But again, whilst it is a pretty strong line, it's not consistent with this claim that we're just going to get massive inflation. I'd literally expect it to be up here, by now, which seems ridiculous. But well, if we get an inflation, then it's going to hit an all-time high, and we were at least at 28 back in 2012. So I want to be up here. As stupid as that might sound. Let's have a look at corn. See what corn's telling us. Yeah, again, exactly the same. Let's have a look. You zoom in, you see the similar sort of story. Oh, we just had this massive rally back in 2020, August 2020 is when the move started up to now. And in fact, you can see we've been consolidating at this zone for a while. This is we're resistance, and at the moment we're looking like we're rejecting this. We've had a good look at all that red. That is a lot of red candles just there. And you can see it was a previous peak here. It was a previous peak here, and it was support here. So in the grand scheme of things, we've got this much inflation, right, that all we're getting is a rejection of a previous trend line. Like the first sign of actual resistance, decent resistance, and we're struggling to get through it. That's how inflationary everything is. Not to mention the fact that, if you go back, look at that. We're nowhere near. Absolutely nowhere near. GFC, let's have a look. What do we have with the GFC? We actually got it on this chart. We bottomed 2007, and then we just boom. Oh, inflation, QE, inflation. Everything's crazy. Got up to July, tank straight back down again. Look at that. And then we've just been having this, inflation again. Everything's going to pick up. Boom. No, none of it. So why is there any reason whatsoever to believe that we're not going to have the exact same thing again? We've just been in this deflationary stage, really, this decreasing price of corn. This is an all-time low. It's ridiculous. Absolutely ridiculous as far as I'm concerned. We're rejecting this. That's not to say we're not going to have a break and get above it. But the fact that we've even considered stopping here when everyone's talking about money printing and inflation is just beyond me. Because if we were seeing money printing and we were seeing, the decline of the currency causing price increase, we just wouldn't get technical signals like this. It would just be up, and it isn't. You know, let's see what else do we have here. I mean, I've done gold in another video, but I'm gonna just do a quick look at gold as well, so you can see, you know, long term. Right, brilliant. Well, in the grand scheme of things, we're barely higher than the peak that we had from the GFC. You know, and that peaked in 2011. So you had the same thing where, oh, GFC, everything crashes down. Oh, we're going to get this inflation, money printing, everyone goes into gold. Oh, hang on a second, maybe it wasn't quite as inflationary as we thought, let's sell off, and it comes back to a reasonable level. You know, and then, you know, consolidates, fine, brilliant, until we got to 2018, then, oh, there's a bit of difficulties, oh, it's going to get worse, oh, they're going to do it. Then we had March, money printing, QE, brilliant, and we barely got above the previous high. You know what I mean? This is gold. This is the biggest inflation hedge in history. You know, you can take your Bitcoin and get rid of it because, you know, okay, yeah, let's say there's a few million people in the United States and Europe that absolutely love Bitcoin, that are millennials and they've chucked their entire life savings in. Those couple of millions do not touch 7.8 billion people on the entire planet, right? That I can guarantee everybody in countries like India and China and anywhere in the Middle East and anywhere in Africa, they want gold and they want silver. Certainly the older generation do, but it's the older generation that tend to have the wealth as well because the younger generation haven't earned theirs yet. Yeah, so if these people aren't piling, well, it's not to say they're not piling into gold, but if the price of gold isn't going up, then that's telling you something. Let's have a look, see what else is a copper. Have I got copper on here? Let's pull up copper, let's see what it's got. COPPER. Nasdaq copper index. I'll do. We'll see what it comes up with. Okay, so we've got. I'm pretty sure I had a better one of this. You can see this rally. We put it in the bottom here in March 2020. Since then we've had a rally, but again, there's not an awful lot of data on this one, and I can still see that we're actually not that much higher than where we were back in 2012. I'm pretty sure I did see a better one. So let me see if I can find it. Oh, copper futures. Here we are. That's a better picture, isn't it? There we go. Right. So yeah, same again with that inflationary at the moment with copper. That it's gone all the way up to almost its previous peak in January 2011. I mean, look, with the GFC, huge sell-off in copper. Well, bearing in mind, copper was already as high as it is now before the GFC, and it'd been kind of up that level for quite a while. It's then sold off dramatically, and then we've got this QE's inflationary, everything's brilliant, oh no, you know, until we got to 2011 and people realised that that's just not the case, and it's sold back down again. I found a reasonable sort of level, and we kind of found within this zone, and it's going to be the same thing again. We're going to get this boom straight up, we might stay here for a little bit longer, and we'll come back down, and at the moment we've still not even got up to the previous peak. You know, again, goes back to what I said before. If we've got inflation, we'd be up here. You know, that's what money printing, that's what it does. You know, if we were printing enough money and the currency is not worth anything, and we're just paying from actual physical metal with pieces of paper that are being created out of thin air, we'd be up here, if not higher, and we're not. You know, it's just, to me, it's madness, especially when you know that everyone is piling into these asset classes. They're all going, I know we're going to get inflation, so I'm going to buy copper. Well, no shit. Of course it's gone up. But it's gone up because everyone's piled into it, because everyone thinks we're getting inflation. It doesn't mean we're actually getting inflation. Yeah, you need to look and think, like, where's money created? It's created in the commercial banking system, at least in the United States. It's created in the commercial banking system. The Fed doesn't create money. It manipulates bank reserves. It manages base money. It doesn't just print out cash to give to anyone. You know, the Treasury, it's a bit different. The Treasury can go, right, we're going to spend this money into existence. You know, and they do that and they issue bonds. But as long as the bonds are getting bought and they're getting paid for, there's no issue. You know, we're not going to get inflation. The reason why we're not going to get inflation is because there's far too much debt in the system. Yeah, people already have a mortgage that they're paying off, and they already have this brand new finance car that they get in every 6 months, and they've got 3 credit cards and a loan, and they've paid for the expensive wedding and, you know, everything else. They've got that much debt that they can't take on anymore. So if people can't take on more debt, then we can't get extra currency into the system via debt. So how do we get the inflation? Well, we don't. The way you get your inflation is you get these defaults. When everybody defaults, and everybody, can't pay the bills anymore, then what happens is, things get repossessed, and then the banks sell everything off and usually make some sort of a loss on it, and that loss gets written off. That's your inflation. That money that gets written off is physical cash that is in the system, but it's just free floating around the system now, rather than going back to the banks and going. This is where your inflation comes from, because not only that then means that, well, if everyone's balance sheet goes back to zero, they're then free to go right back to the banks and lend more money again. It doesn't quite work like that, because usually if you go bankrupt, you can't go and get a loan for 4 or 5 years or whatever it may be. So it's a long-term thing. But this is the point. Inflation is going to come when the governments default, and at the moment the United States is nowhere near defaulting. It's not to say it's in a brilliant position, because it's not. But look at the debt to GDP of the US, and then look at it. France, for example, France's debt to GDP, I'm pretty sure, is around 400%, whereas the US is only 100, or a little over 100. That doesn't mean that the US are brilliant, but it's a hell of a lot better than some of these other countries that are going to go first. Let's have a look at silver again. Silver it's absolutely beyond me. Look, we had this spike. It was up here. $50 back in, where are we? 2011. After this spike in inflation, and then despite having this silver squeeze and everything, it's nowhere. It's nowhere, and it's broken down underneath this trend at the moment. It's heading lower. Look at, here's your bullish flag, here's your move under, you had your retest, and it's moving lower. That's how inflationary it is, and you've got your moving averages under here, so I don't think it's going to be long before we see copper touching this moving average. I think we'll be down to, the average is going to come up. We'll probably be hit in, 24 in a week or two, a couple of weeks. And then we'll maybe stay around this zone before we move on. It depends. There's a lot of things to think about, but to me, that is pretty good proof that things really are not as inflationary as everyone thinks. Especially when you know damn well that there are supply and demand constraints. There are people piling into assets. That is clearly going to pump the price up. So when you see the price higher, it doesn't mean that it's inflation, money printing. It means that people are buying it because they think that they're getting inflation. It's as simple as that. It says it all on the box. Let's have a quick look at yields, see if it's got anything here. 10-year. Oh, okay. So we've got these previous spikes. This is your main zone. We've come back down here previously. We're here at the moment. So it's looking like it's potential that we're going to go down as low as here. There's no reason why we can't see an all-time low go down lower. But at some point it's going to spring back, because it always does. There's never been a period that it's not. And when things spring back, it's just, it's going to be mayhem. Look at this. Okay, it might go higher. Yeah, I think potentially. I think we could see it top up, and at a worst case, I think we'll go up to around 2. Well, probably not quite 2 on the 10-year. That's going to cause some serious trouble if it does. We're not going to get inflation with that. But again, you go back to it, chuck this on the monthly. And the 10, you can see a bit of a curve in this one, but it's just been trending down for years, absolutely years. 1981. So to think that yields are just going to start going boom straight up here, I don't think that's going to happen. We'll see yield curve control if we really have to, because this is the thing. The Federal Reserve, they know damn well that to get inflation, they need to keep interest rates low, so that people go to the bank and they go, hey, I can get a really good deal, I want to buy this thing, and because the interest rates are low, the price goes higher, and everything's correlated, inverse. When rates are up, then prices are down. When prices are down, rates are up. So as long as we've got these low rates, you're going to get the high prices. But how much lower do you want to go? We're at bloody zero, man. Well, not far off. Can we go negative? Yeah, of course we can go negative. They're negative in Europe. They're negative in plenty of places. And do I think we're going to go negative? Probably. But that's not not a sign that we're going to get inflation. That's a sign that there's huge problems. That is the central banks pushing people to go out there and take on debt and spend more money and be irresponsible with the lending because, oh, we're taking money out of your bank account because it's got negative rates. Go out and spend it. Do something with it. You know, the central banks don't have a clue what they're doing as far as I'm concerned. But, you know, that is what it is. The trick is to understand what's going on. And when you actually look at things, you realise that they can often be very different to what it says in the media. You know, back to this again. That isn't a hyperinflation. You know, if we were seeing crazy inflation, the currency is just getting worthless or it's losing its value, we'd be, you know, well, way up here. You know, even higher. You'd be just seeing ridiculous moves, and we're not seeing it. Let's have a look. Bond volatility, LQD. This is corporate bond index. That's on its way down again. You know, that's my little rant over on inflation versus deflation. I'm sure we'll get inflation one day, but it's going to be a long way off.